Which 20 cities in California are at high risk of a housing crash in 2025? And why are experts raising the alarm now? Some of these places are overvalued by more than 40%. That's a bubble waiting to burst. Imagine buying a $900,000 house, and a few months later, it's only worth $600,000. That could happen in these cities. In this video, we'll count down the top 20 crash risk cities in California, using real data on prices, jobs, and migration. And at the end, we'll reveal one city no one expects. But the numbers don't lie. Let's start the countdown. Number 20. Fresno home prices in Fresno jumped 54% since 2020, averaging $420,000. Unemployment is about 6.3%, and crime rates are above average. Many pandemic movers are leaving, causing prices to fall and buyers to hesitate. Now, just above Fresno is number 19. Modesto faces a 7% unemployment rate in 2025, with home prices averaging $450,000. Job losses strain affordability, and rising crime concerns add pressure. High prices combined with fewer jobs increase the risk of a housing crash, moving south to Southern California. Number 18. Riverside saw a 38% rise in home prices since 2020, now averaging $600,000. Unemployment is around 6%, and mortgage delinquencies are increasing. Rising crime rates add to concerns. If missed payments continue, foreclosures could surge. And just below that is number 17. Bakersfield. Bakersfield relies heavily on oil jobs, and with the industry slowing down, unemployment has risen to about 8%. The city also saw a surge in new home construction, creating an oversupply. Home prices increased by around 30%, but are now dropping as demand falls. Most buyers here are working-class families who are struggling with higher interest rates, making the housing market vulnerable. So what about the more suburban, desirable parts of California? Let's keep going with the countdown. Number 16. Chino. Once popular with flippers, Chino now shows signs of a slowdown. Home prices rose nearly 40%, but missed mortgage payments, and a 6% unemployment rate signal trouble ahead. Now heading up north. Number 15. Antioch. This Bay Area suburb saw a surge of San Francisco buyers during the pandemic. Now nearly 40% of listings have price cuts. The city faces a 5.5% unemployment rate and rising crime, making sales tougher. Back down to SoCal. Number 14. Victorville homes here stay empty longer due to its distance from city jobs and long commutes. With gas prices high, fewer want to live far out. The average home price is $400,000, and unemployment is around 8%, causing values to drop. And just next door is number 13, Santa Clarita. Once famous for luxury homes, Santa Clarita now faces a buyer's market with too many listings. The average home price is around $750,000, but prices are slipping. Unemployment sits near 6%, and homes stay on the market twice as long as in 2021. Even wealthy neighborhoods feel the slowdown, signaling a shift where buyers are cautious. If suburbs close to metro struggle, what does that mean for California's high-priced tech cities? Let's move into the heart of Silicon Valley, where the tech crash is starting to hurt the housing market in real time. Number 12. San Jose. This city is tech central, but even big names like Google and Meta have laid off workers. Over 15,000 tech jobs were lost here in 2024 alone. That means fewer people buying and more homes sitting unsold. Just down the road. Number 11. Palo Alto. Once one of the most expensive cities in California. In 2022, the average home price peaked at $3.2 million. Today, prices are flat or falling because even high earners are worried about what's next. Across the Bay. Number 10. Oakland rising crime and a 7% unemployment rate have led many to leave Oakland. Home prices have dropped to around $600,000, causing demand and values to fall quickly. And next up, number 9. Mountain View home to Google HQ. Mountain View is seeing more homes for sale and fewer buyers willing to pay top dollar. The average home price is around $1.8 million, but rising inventory and economic uncertainty are driving confidence down. Unemployment is near 5%, and high interest rates add to the pressure. Even this wealthy, tech-driven city isn't immune to the impacts of layoffs and market slowdown. Let's keep going. We're down to the last 8 cities. These next 4 looked safe during the housing boom, but in 2025, they're showing big signs of trouble. Number 8, Santa Rosa. Known for its wine country charm, Santa Rosa faces high risks, with overvalued homes averaging $650,000. Wildfires have increased, causing insurance pullbacks. The unemployment rate is 6%, and rising crime adds to the pressure on the housing market. Number 7, Elkrove. Located near Sacramento, Elkrove saw rapid growth with home prices around $550,000. However, the market is cooling, with unemployment near 7%. High mortgage rates and rising crime are causing many buyers to hesitate, slowing sales significantly. Number 6, Oxnard. Oxnard's high home prices and stagnant wages create an affordability crisis. With a 6% unemployment rate and rising crime, many residents are struggling and choosing to move away. Number 5, Palm Springs. Once an investor hotspot, Palm Springs is cooling quickly. New Airbnb rules and short-term rental bans are pushing buyers away. Inventory is rising, causing prices to slip. Despite its sunshine and charm, high interest rates, low demand, and reduced buying power are hurting the market. Plus, even as prices drop, property taxes, insurance, and monthly payments stay high, adding real financial pressure on homeowners. Now we've covered 17 cities so far. But what about the final 3 cities that experts are whispering about behind closed doors? The ones most likely to crash hard in 2025. Now let's talk about the final 3 warning zones. These are places where the signs of a major crash are already flashing red. Number 4, Stockton. This city is facing a foreclosure surge. In fact, filings are up 138% compared to last year. That means more families are falling behind on payments, and more homes are heading to auction. When that happens, prices usually crash fast. Number 3, Temecula. Temecula. Once a hot investor market, now faces about 15% home price drops. Unemployment is around 6%, and rising crime concerns buyers. Many investors are selling fast, causing longer market times and increased risks for homeowners and buyers alike. Number 2, San Bernardino. San Bernardino now has one of the highest rates of underwater mortgages in California, meaning many homeowners owe more on their properties than they are currently worth. The unemployment rate is close to 9%, and the city is also experiencing a rise in crime, which is further driving people away. This combination of economic stress and social challenges is causing demand for homes to evaporate. As values continue to drop, expect a wave of panic selling and foreclosures. Investors are pulling out, and many locals can no longer afford to stay, signaling a serious market decline in San Bernardino. Why? Because it may be the first domino to fall in a full-blown California housing crash. So, what is the final city? What place could become ground zero for the next real estate meltdown? Let's reveal it now. Finally, at number 1, Sacramento. This is it, the final city. And it might be the most at risk in all of California. During COVID, Sacramento saw one of the fastest price booms in the state. Everyone moved here from the Bay Area, chasing more space and lower prices. But now, many of those buyers are leaving again. Over 43% of home buyers were from out of town. Now that remote work is shrinking and interest rates are high, that demand is dropping fast. Home prices in Sacramento have already fallen 12%, and some experts believe they could drop another 20% in 2025. To make things worse, home building surged when demand was high, but now those new homes are sitting empty. Builders are offering discounts, and inventory is growing. Many families who bought at the peak are now seeing their equity disappear. It's a painful lesson. The takeaway? When a market grows too fast without solid fundamentals, a crash is almost always next. And that's why Sacramento is city number 1 on our watch list for a major housing correction in 2025. These 20 cities aren't doomed forever, but 2025 could be a rough year for home values. Knowing this now can help you protect your money, or even time your next home purchase. Subscribe for updates on when these markets bounce back, and what to watch before you buy. Which California city do you think is next? Did your city make the list?